Morning, guys. Happy Friday. It's April 4th, 5:30 a.m. Central Time. The grain markets are now trading lower to sharply lower following some news that was just out about 20 minutes ago. It was announced. We don't even have a story here because this just came out. China imposes 34% tariffs on all U.S. imports as retaliation. This is new as of early this morning. Soybean futures are down 20 cents on the lows, making fresh lows for this move here. Corn's down 5, wheat's down 10. What is your initial reaction here, Matt? Breaking news this morning.
I don't like tariffs, I guess, is my initial breaking news. It's impossible to trade. You had to know that they were going to do something, but it sounded yesterday like they want to sit down and talk. So a little bit aggravating to, to see this. But I mean, it's a trade war, and so, what do we expect is going to happen? Clearly, it's a fluid situation, but yeah, it's pretty frustrating. Possible trade.
Just last night, it was written in several places that China's response would only include domestic stimulus, strengthening ties with other trade partners, and they didn't really discuss additional tariffs. And then all of a sudden, 5 a.m. this morning, boom, here it is, 34% on everything. And I would assume that there's zero details here yet. I would assume this includes soybeans.
Yeah, I mean, that's going to be the biggest one, I would say. It would be soybeans. They know what's going to create some stir and get our attention. And so, by all means, I'm sure that it includes soybeans.
Okay, well, our first this was going to be our first official story today, but that's the big news today, guys. That's why the market's down. We have no details. There will be details later. We'll talk about it Monday. Let's go to what Brooke Rollins said yesterday.
So the potential for more direct farm payments to offset tariff-related losses is still months away. In a Fox News interview on Thursday, Brooke Rollins stated that the Trump administration will decide in the coming months whether to provide financial aid to farmers affected by tariffs. She noted that officials are still evaluating whether such payments will be necessary. During Trump's first term, the government issued a $23 billion bailout to farmers to offset tariff losses. This time, the potential aid package is expected to be much larger as the new tariffs impact multiple countries rather than focusing solely on China as they did during Trump's first trade war.
So Rollins has talked about this a lot this week. I think she was in Iowa and she talked about this, and now she's talking about it on national cable news. In any case, this talk is circulating as the $10 billion in ECAP funds are being distributed, and the ECAP funds have nothing to do with the trade war. This is going to be like a more MFP style payment. But Matt, if this wasn't likely or probable before this morning, I'd say it's damn near a lock right now.
Yeah, months away and days away, yeah, absolutely. Let's say that this continues, in this fashion, where China's going to get, pretty serious about this and, cancel some soybean sales. I mean, that's something that I've thought was maybe probable, coming into this, and then they just say, we're not going to buy any new beans off you guys, you guys want to be jerks, we'll be jerks. If something like that happens, then clearly this is problematic. And I would say that this MFP type talk is something that would be expedited. But, you talk to a variety of growers, they're like, man, I don't want to have to farm for that again, and so on and so forth. But I guess whenever it gets right down to it, you're going to see something happen if these markets don't change. I mean, you know that, and I know that. That's what happened last time. So
there's certainly a bigger, more argument out there, and you could argue that China really needs the United States. They do. They need us to buy their stuff, but this stuff could still last for months. I mean, it could. It did the last time around. I guess you have your farmer hat on. With your farmer hat on, as a farmer, you talked about it for a second though. You don't like to rely on this stuff.
No,
Is that how most people feel?
Yeah. And I know that, shoot, you could get wrapped up in this stuff pretty easy. Social media is all over it.
Oh,
yeah. I don't know why you guys are always wanting, but here's the thing. If you're not a farmer, or if you're someone who's speaking out against this type of stuff, a day like today is a perfect example. Yes, there's risk management tools out there. I totally get it. But at the same time, you're looking at growers that were underwater coming into this trade war, as far as marketing new crop soybeans. Let's just talk new crop soybeans. And so you tell the farmer, well, you could have went ahead and managed some risk. Oh, I could have locked in a loss already. You
Yeah.
know, I mean, and so now all of a sudden, you slap tariffs on and you go down to 18 cents one day, and then China slaps back and you're down 22 cents the next day. All of a sudden, you got no beans at 9.95. I
Mhm.
mean, yeah, I mean, so yeah, the farmer in this particular situation, like it or not, is completely beholden to what's going on, from the federal government standpoint. Okay. So I understand people being aggravated about it that don't understand it, but that's the long and short of it, is you have no, there's nothing you can do as a grower in this situation.
I'll
Nothing.
tell you what's on my mind. So I'm not a farmer, but I help farmers with marketing and risk management. And in the back of my head, I have had this thought that I'm going to become a hell of a lot less relevant because of these direct payments if they continue. Have you had that thought?
Yeah. I mean,
Does it bother
yeah.
you? I mean, I'm not saying that's like how I feel 100%, but there's just like a small part of me that says, man, maybe what I do doesn't serve a purpose anymore. I don't know.
Well, I mean, if that's what it was going to be year in and year out, sure. I don't believe that that's going to be the case.
I don't think so either, but I've had the thought.
That's just my opinion. And ultimately, I think whenever it gets right down to it, I've had guys call me and just say, "Hey, I don't see any reason to do anything from here on down, because if we go down from here, we're probably going to be getting an MFP payment
Yeah.
anyway." I mean, I've had guys tell me that in the last 2 days. So
Yeah.
yeah, that talk's out there. There's no question about it. Does that mean we're going to become less relevant? I still think there's things a person can do to help a person manage risk.
Mhm.
This is probably a dicier, more complicated situation than what most people are used to, though. And so, and I don't think there's a right or a wrong answer. I'm not saying I've got the answers. I'm just saying that, I still think there's things a person can do.
Yeah, absolutely. Okay, so the stock market got clobbered yesterday. The Dow's down another 1,000 points this morning. Let's talk about that.
The S&P 500 retreated into correction territory, notching its largest single-day decline since 2020 with a nearly 5% drop yesterday. The benchmark is down about 12% from its record high set in February. The Dow Jones and Nasdaq also recorded their worst session since 2020, declining 4% and 6% respectively. President Trump downplayed Thursday's massive market losses, expressing confidence that both the markets and the country will experience strong growth. According to JP Morgan, a recession is now likely if the new tariff rates remain in place without renegotiation.
This is an ugly, ugly bar on the S&P 500 chart. If you pull back and look at the weekly view, I mean, you could argue that there's still an uptrend in place from the COVID low, but it's turning into a nastier correction. We're going to talk about commodities in a second, Matt, but recessions aren't good for commodities typically if that's where we're headed. It results in less usage.
Yeah, absolutely. I mean, there's a whole host of things. You can enter a recession. Everybody pulls back. Money pulls off the table. As you said, usage. I mean, so it's certainly problematic. I did think it was interesting going back to what Kinsey was saying about President Trump. He said the markets are going to boom. So it doesn't feel that way right now, I guess, would be the easiest way to put that. But who knows? I mean, I hope he knows what he's doing. But by all means, you look at this and right here at tax time, Joe, I thought it was interesting. I had a guy yesterday tell me, man, I'm really glad that I made that contribution to myself.
Yeah.
Because I mean, this is the time of year you're doing it. And, one day in, you're down significantly. But yeah, recession's not good.
I don't do investing advice, but Mackenzie asked me before we started taping. She's like, "Are you worried about the stock market?" I'm like, "Mackenzie, I'm 41. I'm not worried about the stock market. These are opportunities, these dips. Now, I'm not saying that this is the low, but to buy into a 10 or if you get to a 20, 30% correction from the all-time high, if you're younger, you need to think it, and I'm not young, but if you're youngish, you need to think of it through that lens would be my advice."
So the Bloomberg Commodity Spot Index saw its biggest single-day drop in over 2 years yesterday. The index, which is made up of 24 commodities ranging from grains to gold, fell by 2.5%. Although Trump excluded commodities like oil and steel from his tariffs announced on Wednesday, they were still affected by the market sell-off. Also on Thursday, OPEC Plus announced plans to increase oil production by over 400,000 barrels per day next month, 3 times more than originally planned. As a result, WTI crude fell by as much as 8%, its steepest intraday decline since July 2022.
So this is the Bloomberg Commodity Index chart through yesterday, and this is an ugly bar for this week, but it's not the end of the world. It's going to look worse though when it prints its first print this morning. And again, this kind of speaks to the idea that if there is an economic slowdown that's spurred by tariffs or whatever, it's not good for commodities.
No, not good for commodities at all. You look this morning, we're down what, 460 on crude again. I mean, that's a massive hit. In the course of 2 days, you go down $10. So yeah, no, this isn't going to look very good at all. I mean, you look over a host of basically any commodity and you're lower. I do see that gold is up, which is kind of nice to see, but who knows? Maybe it can be the savior. And
that's like your fear gauge. I think the more fearful people are, the higher gold is going to go.
I was surprised yesterday it was down though, you know. I mean, everything was down, and then gold. I mean, it made a run there for a while, and it was trying to get back to positive territory, and then I turned around, it's down $40 again. But
okay, I had some grain charts thrown in, but they're going to look totally different now, so I'm not even going to use them. Let's just go straight to Mexico, which is maybe one piece of good news.
Right. So Mexico does not plan to retaliate against U.S. tariffs. Instead, President Claudia Sheinbaum announced that the country will introduce a comprehensive tariff program. Her statement was released on Wednesday, just before President Trump announced the new 10% tariff on all imports, along with his aggressive reciprocal tariff policy. Trump excluded both Mexico and Canada from reciprocal tariffs. In recent weeks, Trump implemented a 25% tariff on Mexico and Canada to curb the flow of migrants and fentanyl into the U.S. However, products covered under the USMCA trade agreement are exempt. Similar to previous years, Mexico is the largest importer of U.S. corn for the current marketing year.
So I think the yesterday is now the distant past because everything's different this morning because of these China headlines. But yesterday, the corn market started to bounce when Sheinbaum was talking. And corn actually was trading, 12, 13 cents off of the lows at one point yesterday. We traded higher for a minute yesterday. It felt like corn, at least yesterday, went back to trading fundamentals. And the fundamentals are that, U.S. supplies are pretty tight. Global supplies pretty tight. Still doing a lot of export business. And it doesn't look like Mexico's going away.
Yeah, I mean, 14 3/4 off the low on the front month May futures.
Yeah.
I was like, holy smokes. Yeah, no doubt. I mean, I still feel like that is going to be the case. I mean, when I woke up this morning, we were down, I believe 8 cents, and we're down to nickel right now. So I don't know. I mean, to me, I think ultimately, clearly some of these trade issues, world trade flows, they're going to be impactful on prices. We know that, but world fundamentals, to me, are something that you can't ignore. I mean, U.S. fundamentals. I mean, regardless, you look at either one of those situations and they continue to tighten. And so if you have summer weather issues, and this market gets beat down due to, let's say, tariffs, that corn follows soybeans along, because I think that's the way that would go. You could have an explosive market if you have weather this summer. I mean, like a super dynamic type market. So, I don't know. I hope that we can stick to fundamentals somewhat here. I do like volatility, don't get me wrong. But I think it could take some prisoners if that's the way the market acts.
Yeah. My personal feeling on the corn market is that the tariffs are, holding a beach ball underwater, as they might say. And that the market kind of wants to go higher, but then you get the tariffs and you get the liquidation, you get the headlines, you get the liquidation. It's kind of frustrating. I don't know.
Severe storms from Oklahoma to Indiana caused extensive damage on Wednesday and Thursday. At least 6 people died in western Tennessee, Missouri, and Indiana, while many others were injured. The storms are the first of many expected in the coming days, with heavy rainfall being the primary concern. The storm system is expected to cause major flooding, especially along the Mississippi River and in parts of Kentucky and Tennessee. Some areas could receive more than a foot of rainfall. Storms with strong winds, heavy rain, and possible tornadoes are forecast through the weekend.
Yeah, let's look at some rain, and there's actually some snow up in the Dakotas and Minnesota, I believe. But the band that got like the real nasty stuff is this, Arkansas into West Tennessee, West Kentucky, a little bit of Southern Illinois and Indiana. This is odd spring weather, Matt.
It's super odd. I mean, I know you and I have talked about this a little bit already, but I mean, we've had like 4 tornado warnings in the last 3 or 4 weeks. I mean,
Yeah.
it's just one of these nasty storms come in after another, and they've packed a punch. They've kind of come from like this direction here instead of due from the west. I mean, it's coming from like from the southwest up towards us. It's not completely abnormal. It's just every one of them's followed the same track. It's been super odd, but we have had enough moisture, at least for the time being. I mean, of course, we're too wet to farm, but we're just now getting tiles running, so we were excessively dry, even right here in central Illinois. I know a lot of people are very thankful for this rainfall, but those south of me that could get 10 inches of rain, man, I can't even imagine where that would go. So I'm hoping for those folks that that's not what they have to experience.
Well, so this is what you've already seen is 4 or 5 inches over the last 3 days in some of these areas. And there's rain on the radar again this morning. And the forecast is wet again for the same areas for another. This is just the next 5 days we're talking. And the amounts could be an additional 4 inches, 4, 5, 6, 7, 8, 9, 10 inches, depending on the location. I don't know. They'd be planting corn or soybeans in these areas right now.
For sure. I know a few guys, in the Delta that have said they may end up having to switch a few acres of corn over to beans. And we're not talking substantial, but they're getting a little antsy, because they just continue to get pummeled with rain. So it'd be interesting to see, how this all plays out. But you've got a divergence. Yes, they've gotten some rain in the west, but at the same time, it's not like there hasn't been some folks running here and there. And so, there's still a lot of concern that Western Corn Belt could be dry this summer. I mean, it's a very dynamic deal where the East is looking like it's going to be a little bit late getting in. I mean, right now we're probably looking in Central Illinois, closer to the middle of the month. If we get the rain we're supposed to get this weekend, so that's not the end of the world. But I mean, if you get out to the middle of the month and now you get another wet forecast, that's when you start to get a little frustrated. But
is it too early to say that this is going to be a less than ideal start nationally?
Yeah, probably a little too early, but I'd say if we were sitting here talking about it next week and you've still got a very similar setup, then I would say you're starting to get there. Because the thing is clearly nowadays you want to get the beans in the ground as early as you possibly can to get them in to where they're flowering before summer solstice. And most guys like to start planting corn and beans same time. I'm glad everything's in the shed for me still, to be honest with you, because it's cold and wet. I can't stand a cold and wet spring. So until this thing turns around, I do think that there's going to be some angst that this is going to be a tougher spring. And I do think the market will pay attention to it.
All right, let's go to the drought monitor.
So a winter storm delivered substantial moisture to northern areas of the Corn Belt last week, alleviating drought conditions in Wisconsin, Michigan, and southern Minnesota. A small area of northwest Ohio also saw conditions improve. Roughly 28% of the region is experiencing some level of drought, down from 32% at the beginning of the year and steady with year-ago levels. Precipitation across the High Plains was limited, with the exception of scattered rainfall here in central Nebraska, which eased drought conditions. When we look at the percentage of U.S. areas experiencing drought, corn country 39%, soybeans 33%, winter wheat 37%, spring wheat 39%, and cattle country 43%.
I'll be curious to see what it looks like again a week from now after all these storms and snow. It's kind of reflected because I don't know that it was all reflected in this. U.S. corn areas experiencing drought dropped to 39%. So you've seen a fairly sharp decline. That number was north of 80% late in 2024. So it's come down, but I think that's still pretty high for this time of year, isn't it, Matt?
Yeah, I mean, it's still pretty high for this time of year, especially, you and I've talked about this a couple times before. Spring's not the time that you want to alleviate your drought stress, but it is typically. I mean, the spring rains, everybody seems to get some spring rains. So I think the overwhelming question for me is, does the lack of subsoil moisture, is that something that's going to persist, for most people? And I think in the West, they haven't had enough rainfall yet, to say that they feel good about subsoil moisture. So I still think it might be one of those years, especially west of the Mississippi, where people are going to need very timely rains, and that's okay. I mean, we can see that happen. These hybrids are super capable of adapting and taking on a lot of stress. But I mean, most of your summer weather models are still predicting that they are going to be drought there. I mean, you shoot me if you want. It's just what they're saying. So I'm not a weather guy. I'm just telling you what the weather models are saying.
Let's do export sales real quick.
Export sales are not in front of me right now, Joe.
Did I delete export sales?
I think you might have deleted export sales on the email, and that is where I got my copy in front of me.
Corn sales were good last week,
yes.
Up 13% on the week. Soybean sales were not bad for this time of year, and wheat sales were not bad either. Matt, I don't know that there's been yet a tangible impact on exports from the tariffs.
No, I don't know that there has been either.
It's all sentiment and fear right now.
Yeah, I believe so. And quite frankly, I mean, call me crazy, Joe, but I do think that, Trump's been trying to elicit a response from people. He got a response from China now. Maybe they're going to talk, I mean, I don't know. I mean, who knows? But clearly earlier, whenever China knew that we were threatening tariffs, they were still buying beans. I mean, they were still buying beans. I mean, they were on the sheet this week.
Yeah.
I mean, China was the largest buyer in the week. You see it right there.
And they had they've got a 10% tariff that they slapped on 3 weeks ago now. I mean,
yeah.
So now it's higher. Okay. What did cattle do yesterday?
Cattle futures were down hard. Live cattle were 232 to 275 lower. Feeders saw losses ranging from 347 to 480. Box beef was also lower. Choice was down 153 at 338.37, and select was down 99 cents at 317.84.
Markets are just a mess, guys. It's 5:51 as I'm speaking right now. It'll be obviously different by the time a lot of you guys see this, but corn's down 7, beans are down 24, wheat's down 12, the Dow's down another 1,200 points, the S&P's down 160, bonds are up 2 full handles, U.S. dollar is about flat, curiously. Crude oil's down $4. So messy morning here on Friday. Matt, thanks for joining us. Have a great weekend, guys. We'll be back on Monday.